This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Pachardis. Thanks for joining us at XM.com. Risk appetite is looking increasingly on borrowed time as stocks turn sideways, having lost momentum after last week's sell-off. Global shares on Friday could only manage a tepid rebound from yesterday's dip amid ongoing worries about the surge in new virus cases in the United States. The number of new daily coronavirus cases reached record levels in 10 U.S. states this week, putting into jeopardy the reopening of the economy. Fresh doubts about the economic recovery were also raised from stubbornly high weekly jobless claims out of the U.S. yesterday. There was better news elsewhere, however, as China said the outbreak in Beijing has been contained. The mixed news flow kept today's gains in equity markets in check, with S&P 500 E-mini futures indicating a 0.5% rise at the open today. On balance, despite the latest setbacks in the medical and economic data, the prevalent mood is still one of optimism, as investors remain hopeful that a vaccine will be found before the end of the year, enabling economies to fully recover from the pandemic. However, even if those expectations were to materialize, there are plenty of other risks that markets have been ignoring lately, the main one being the recent souring of Sino-US relations. Trump's tweet that a complete decoupling from China is a policy option for the U.S. could be one factor buoying the safe haven gold today. The precious metal was last trading up 0.5%, though it remains flat on the week. The U.S. dollar and yen, on the other hand, have had a clearer trend, moving steadily higher since Tuesday as the rebound in stocks fizzled out. The weakening risk-on tone has been a major drag on the euro and pound, as well as the commodity-linked dollars. The euro hovered around the $1.12 level, as it's looking unlikely that a deal on an EU fiscal package will be reached before July at the earliest. The pound slid sharply after the Bank of England struck a somewhat hawkish tone at its policy meeting on Thursday. As expected, the bank added £100 billion to its bond purchases, but its policy statement hinted at no further stimulus for the rest of the year. This was today's Daily Market Comment. Thanks for joining us at XM.com.